Tonight, we spotlight a project set to reshape global trade, China's Pan-Asian Maritime Corridor. This ambitious undertaking is more than just a new waterway. It's a bold vision for the future of international commerce, promising to alter the very map of global shipping. In a bold move, Beijing has announced plans for a new canal, an infrastructure investment on a scale not seen since the legendary Suez and Panama Canals. The world has not witnessed such a transformative project in over a century, and the stakes are higher than ever. This canal aims to reroute the flow of commerce, positioning China as the central hub in global logistics. By creating a faster, more efficient route for goods, China hopes to attract more international trade and strengthen its economic influence. It's a direct challenge to century-old maritime routes, with far-reaching implications for shipping costs, delivery times, and the balance of power in Asia and beyond. The new canal could reduce transit times by days, saving billions in fuel and operational expenses. The canal is the physical centerpiece of China's Belt and Road Initiative, tying together land and sea routes into a single, massive network. This integration could reshape how goods move between continents, connecting economies like never before. As blueprints are revealed and construction begins, the world is left to consider: will this new waterway bring efficiency and prosperity, or deepen global divisions and competition? The answers remain uncertain, but the world is watching closely. The story of this canal is just beginning, but its impact will be felt for generations. As ships prepare to navigate these new waters, the future of global trade hangs in the balance, promising both opportunity and challenge for all. Let's break down the numbers behind China's canal. The initial $7.5 billion investment is just the start, with costs expected to rise as construction and technology ramp up. State-owned giants and the Asian Infrastructure Investment Bank are leading the charge, making this a flagship Belt and Road project. The plan includes automated smart ports, 5G-driven logistics, and massive locks, designed for the world's largest ships. Construction is set to finish its first phase by 2030, with full expansion by 2035, employing tens of thousands and transforming the region's economy. For China, this is more than infrastructure. It's a strategic play to control a new maritime choke point, secure supply chains, and generate revenue from global trade. The return on investment could be immense, but the real prize is geopolitical leverage. The world must now weigh the true cost of this new artery. Where will this canal run? Across Thailand's Kra Isthmus, a shortcut between the Gulf of Thailand and the Andaman Sea. At 102 kilometers long, 400 meters wide, and 30 meters deep, it's built for the world's largest ships, allowing two-way traffic and bypassing the congested Strait of Malacca. Unlike the Panama Canal, this will be mostly sea level, promising faster, simpler transit. The Malacca Strait, a vital but vulnerable choke point, currently handles a third of global trade. For China, the new canal means a secure, direct route for energy imports and exports, reducing reliance on routes controlled by rivals. Thailand, in turn, gets a transformative economic boost and a closer partnership with Beijing. China's offer of full financing and a long-term lease sealed the deal, tying Thailand's future to its northern neighbor. This is more than a canal. It's a new axis for Asian trade. The canal will redraw global trade routes overnight. Ships from the Middle East to Shanghai will save up to 1,200 kilometers, cutting 2 to 3 days off each journey and saving millions in fuel and operating costs. Faster shipping means lower prices, smaller inventories, and a greener supply chain. New Thai ports will rise as major transshipment hubs, challenging Singapore's dominance and shifting economic power within Southeast Asia. European, Japanese, and Korean exporters will benefit from quicker access to Asian markets, but will also find themselves more tightly linked to China's trade network. The canal isn't just a shortcut, it's a lever, pulling the world's economic center of gravity toward East Asia. The global map of winners and losers is about to change. For China, the canal is a masterstroke of strategy. It solves the Malacca dilemma, giving China a secure route for vital oil imports and reducing exposure to US naval power. By requiring transit fees in yuan, Beijing pushes its currency onto the world stage, challenging the dollar's dominance. The canal's construction will showcase Chinese technology, AI, 5G, and smart ports, setting new global standards and exporting China's development model. It also links the Belt and Road's land and sea routes, creating a seamless logistics network across Asia. The result: deeper economic dependence on China for the region and a new level of geopolitical influence. For Beijing, the canal is the linchpin of a grand vision, one that could pay dividends for decades. It's not just about trade, it's about rewriting the rules of global power. The world is watching and recalibrating. The canal is as much about geopolitics as it is about economics. While it promises to boost trade and shorten shipping routes, its true significance lies in the shifting balance of power it represents. Every container ship that passes through is a reminder of the strategic leverage at play. By controlling a new choke point, China gains not only economic influence, but also significant political leverage over Thailand and every nation reliant on the route. This control could allow China to shape regional trade flows and exert pressure in times of tension. Thailand's pivot toward Beijing could trigger a domino effect in ASEAN, forcing neighbors to rethink their alliances and strategic partnerships. As Thailand draws closer to China, other Southeast Asian nations may feel compelled to reassess their own positions, potentially leading to a realignment of regional loyalties. U.S. allies like Vietnam and the Philippines will likely view the project with deep suspicion, concerned about growing Chinese influence. Meanwhile, Cambodia and Laos, already closely aligned with Beijing, may draw even closer, further deepening regional divisions and complicating diplomatic efforts. For the U.S. and its partners, the canal bypasses traditional areas of naval dominance, complicating security strategies in the Indo-Pacific. The new route could limit their ability to project power and respond quickly to regional crises, forcing a rethink of military deployments. Expect increased naval activity from the US, Japan, Australia, and India as they seek to counterbalance China's expanding reach. Joint exercises and patrols will likely become more frequent, signaling a renewed commitment to maintaining a free and open Indo-Pacific. The canal could become a flashpoint in future crises, with security arrangements and the potential for a Chinese military presence in Thailand under intense scrutiny. Any sign of militarization could heighten tensions and spark international concern. Control of strategic waterways has sparked conflict before. This new canal could be no exception. History shows that such choke points often become arenas for rivalry and confrontation, especially when great powers are involved. The balance of power in Asia is shifting rapidly, and the world is on alert. As alliances evolve and new rivalries emerge, the canal stands as a symbol of the region's uncertain future and the high stakes of global competition. Experts are divided on the canal's impact. Security analysts warn it lets China project naval power into the Indian Ocean, encircling India and challenging the status quo. Economists see efficiency gains for global shipping, but worry about overdependence on a single state-controlled route. Environmentalists sound alarms over the canal's potential to devastate fragile ecosystems, from mangroves to coral reefs, with risks of spills and pollution. Financial experts caution that Thailand could face a debt trap if revenues fall short, echoing concerns from other Belt and Road projects. The canal's benefits are real, but so are the risks: geopolitical, economic, and environmental. Transparency, oversight, and international cooperation will be crucial. The world must ask, who truly benefits and who bears the cost? As construction begins, these questions will only grow louder. The stakes could not be higher. In Washington, China's canal is seen as a direct challenge to U.S. influence in Asia. The project is not just an engineering feat, it's a bold geopolitical move that signals Beijing's growing ambitions on the world stage. The U.S. response will focus on strengthening alliances with countries wary of Beijing, deepening diplomatic ties, and reassuring partners that America remains committed to the region's stability and prosperity. Ramping up joint military exercises will demonstrate unity and resolve, sending a clear message that the U.S. and its allies are prepared to defend their interests. At the same time, Washington is investing in alternative infrastructure, supporting projects that offer countries choices beyond Chinese-backed initiatives and promoting sustainable development. American companies may benefit from faster shipping and reduced costs, but the economic gains come with new strategic calculations. Strategic concerns will drive policy, pressuring Thailand on transparency, fair access, and ensuring the canal does not become a tool for coercion. The U.S. will also fight for a share of high-tech contracts, aiming to maintain a technological edge and secure critical supply chains. The canal accelerates the decoupling of U.S. and Chinese economies, as both nations seek to reduce dependence on each other and build separate spheres of influence. This new reality forces nations to choose sides in a bifurcated global system, where economic and security interests are increasingly intertwined. For the U.S., it's a wake-up call. The era of uncontested dominance is over, and the rules of engagement are rapidly changing. The challenge now is to adapt to a world where rivals can build and control new arteries of global power, reshaping the flow of trade and influence. The canal is a symbol of this new reality, one where competition, not consensus, shapes the future. The stakes are global, and every decision will reverberate far beyond Asia. The race is on, and the outcome will define the balance of power for decades to come. The world is entering a new era of multipolar rivalry, where influence is contested on every front and the future remains uncertain. China's $7.5 billion canal is more than an engineering feat. It's a turning point for global trade and power. It promises efficiency and prosperity, but also brings risks, debt, environmental damage, and new geopolitical fault lines. The canal challenges old alliances, redraws trade maps, and cements China's central role in the Indo-Pacific. As the U.S. and its allies respond, the world faces a choice: shared prosperity or deeper division. The first shovels are ready, but the final impact remains unwritten. Will this new artery bring nations together or carve new rifts in a fractured world? The answer will shape the century ahead.